because holy cow, we got a CPI number today that was epic in terms of the market reaction. Now, ultimately, if you look at the CPI data, it came in slightly better than expected. I think the biggest thing today, if we flip over to my screen here, what we can see is U.S. consumer price inflation cooled to its lowest annual rate in 2 years in April. Now, if we look at the data, right, headline inflation cools to 4.9%, core inflation ticks down to 5.5%. Now, the market had expected basically a 5 handle on the consumer inflation number, right, the CPI data. The fact that it came in at 4.9, it puts that psychological 4% number in front. That is why you're seeing the equity markets rally across the board, and we're also seeing gold pop, Bitcoin pop, stocks like I just mentioned are all getting a bid, and the dollar is diving. All right, now again, why is the dollar dropping when there's less inflation? I love this aspect of people not quite understanding. I want to be clear on this. So again, think about this. Inflation's coming down, which means less money in the system, but the dollar's also dropping. Why is that happening? The bottom line is it's dropping because the lower inflation goes, the more likely the market is factoring in that the Federal Reserve can print more money later on. Because inflation is low, they can print more later when we get in a recession, which again, folks, I've said this to you guys, I'm going to say it again. I am going on record saying that by the end of this year, we will be in a recession. I think it's fourth quarter, but again, it's coming. All right. The bottom line is let's get into some charts. So we talked about the CPI data here, guys. I want to show you quickly the Dixie, the DXY on my screen. Take a look at the intraday chart. Look at this collapse in the dollar. That is an amazing drop right there. So again, the dollar on the back of this CPI data, which was better than expected, meaning lower inflation, took a nosedive here and down we go. Now, if we look at the chart, this is not a surprise, right? We look at a chart of the dollar and we can clearly see that we were hovering below a wedge pattern. All right, now a wedge pattern is basically consolidation, meaning that we stayed within this high and these lows, and we went sideways with chop. We then broke lower. Now, if we go and zoom into this period right here, what we can see, and this is very cool, guys, notice how we closed below on the DXY right here, and we never confirmed. What happens? The dollar rallies up. Then we come down again, we close below and confirm. The confirmation signal is something that I teach in my Winning Trader series, and it is game-changing. It tells you when it's a real breakdown versus a fake-out. The first one is clearly a fake-out. The second one is real. What does the real breakdown mean? It means that when it travels back to that trend line, it's going to get rejected 8 out of 10 times. That's 80% success rate. It's going to get rejected. It gets rejected, and then look at the drop we're starting here. Based on this chart, we likely will see a breakdown. And I want to put another trend line on the chart right here. So take a look right here. Put this trend line here. Look at where we're coming down to. Notice pivot low. Pivot low, we kind of kissed over here. This is your support level at 100.82 on the DXY. I expect within a few weeks that will be broken and we will see this going lower. That's going to be bullish for gold. It's going to be bullish for metals overall. Whether or not it will be bullish for the stock market is another story. Eventually, a dropping dollar will not be bullish for the markets. Right now it is. Take a look at the SPY. Let's flip to the SPY, which is the S&P 500. Take a look at the run here. This is your pre-market data on the SPY. A monster surge to the upside. Now, just a reminder, every week for the last couple weeks, I've just started these game plans on Wednesday, folks. The previous week, 2 weeks ago, I gave you a huge trading opportunity on a short on Bitcoin that I took in here. And now last week, I gave you a great trade level on Estee Lauder, symbol EL, and that was huge alpha. So my goal here is to literally give you guys tradable information, and we're going to get to charts. I'm going to give you levels in this video, in this game plan that you can trade today in the markets. All right, so what am I doing here? So I'm just going to be flat out with you guys. I started to fade this S&P rally. I began to inch in a little bit on the short side on the S&P right above this 414 level. I'm expecting a pullback. Now, this is not necessarily a swing trade. This is more of a day trade. But again, even holding it as a swing, I would not be upset at these levels in the S&P 500. I continue to be bearish overall, S&P, NASDAQ. I think the NASDAQ is the most bloated. In fact, check this stat out. The NASDAQ relative to the S&P is the most overbought. The last time it saw these levels was in the 1999 to 2000 range, meaning that you go back to the dot-com bubble, and that's the last time there was this disparity between stocks in the S&P and the NASDAQ.